What's going on, good people? Welcome back to another episode of the Bison Trading Show, coming at you live from the Bison Trading Lab. Welcome to another week, another installation of our live market trading analysis session, where we come to you and we tell you all of the best charts that you need to trade this week and what levels you need to look for. If you don't know, I'm half of the Bison Trading Show crew. I go by the name of Top Trades Futures, and of course, I'm here with my guy.
With the one and only I'm the D guy, aka Pro Financial Man. I appreciate everyone who pulled up tonight. We definitely going to review some of these levels to see what the market is going to give us this week. And you know that we give those levels just to prepare for that number one day, Friday, the Bison Trading Live simulation. That is what we do for the whole week to prepare for that day. But enough of the chit chat. We going to dive right on in, man. Let's get it.
All right. So, for everybody that tuned in, thank you. We appreciate you. I know you guys saw my story where I said I want to tell you why the Dow Jones is going back to 35,000. And today I want to break that down and give you the exact reason for that statement. So, because it's the beginning of the week, you know we have to start off with our higher time frame, because we like to do something that's called top-down analysis, where we start from the higher time frames to figure out what the long-term trend is, and then we break that down, show slowly but surely, chart by chart, until we get down to the lower time frames. So that way, we figure out the long term, we figure out the midterm, and we figure out exactly what's going on right now, so we can have all that information available to us when we do decide to take whatever trade we need to. So, when we look at this weekly chart, like we know from our past classes that the trend has been back into an uptrend ever since these lows on March 20th. And we see that we've been able to make higher highs and higher lows since then. Knowing that we have higher highs and higher lows confirms that the uptrend is still going on. Now, that brings us to where we're located currently right now. So, if you look at where we're at, remember a few weeks ago we had these two tweezer bottoms and we was like, look, those tweezers are going to lead to a bigger move. Well, that's still the case in my opinion. Only thing is we came back and we retested that level. So instead of it being a tweezer bottom that starts the reversal, it's more than likely going to be a double bottom that starts the reversal. Because notice, this is a weekly chart, by the way. We came all the way back down to these wicks at these lows, and we turned right around and made our way back up. So that's a good thing. Because in this market, we know that the overall trend is up. And I don't know if you guys have been paying attention. I'm pretty sure you have. But if you haven't, every time we make all-time highs, we always pull back. And it gives us an opportunity to hop in at that pullback. That's happened numerous times since the beginning of the year. I think I told you guys back in February when the first time it happened, I was like, look, for my long-term traders, y'all need to start stacking up and going long. Same situation now, just at higher prices. We've had a pullback off of all-time highs. It's only a matter of time before we make a new one based on how this chart is moving. So we need to be able to take advantage and get into the Dow Jones at low prices before it gets back up to 35,000. Because I honestly had the idea about going long. I had that 2 days ago. And I was thinking by the end of the week, I should be prepared financially to actually open that position. I wake up on Monday, the market is up by 725 points on one day. So that's telling us that this uptrend is very strong. The buyers are in the market and they're flexing their muscles right now. Now, when we look at the daily chart, what we can see, we see the breakdown of that overall wick where we came back and retested it. We can see it in a little bit more detail right now. And then we also had a bullish engulfing that completely covered the candle next to it. And we've also seen green candles following a bullish engulfing. That's one of the best bullish signs you can see on the chart. And also, before I move on, having that type of bullish activity combined with a major demand zone being held up is very important. And also, we scroll over to the left, that same wick that D points out to you guys all the time, that used to be an all-time high, is holding up once again. So we know that this level is extremely important down here at 33,250. That's the demand zone right there. So let's go ahead and continue moving down the charts to the smaller time frames. Let's take it out to the hourly chart. Now, off the hourly, what's the first thing that we see when this chart pops up on the screen? The first thing that I see for sure is V pattern reversal right here. Look at this, man. This is perfect setup where you had a consolidation move, moving slightly lower, and then you finally had the bottom of the market drop out. We flashed all the way down to 33,000, right? But as soon as we hit that major whole number level, you know those numbers are always important, always key. We've had nothing but green candles throughout the entire side of the V pattern reversal. That's a really good thing that you like to see where you had all of this selling. Look at this. We only had 1, 2, 3 green candles during this whole down movement. But then look at the up movement that answered the sellers and what they just did. All green, all the way back up. So that tells us that whatever momentum the sellers had is gone, at least for right now. Coming out of a V pattern reversal is one of my favorite setups. And I think it's interesting how all of the charts find a way to line up. Notice how we have a bullish price action pattern on the daily chart. And what do we have on the hourly chart? We also have a bullish price pattern. So these things line up and correspond with each other. That's why being able to understand the higher time frames all the way down to the lower ones helps you make better trading decisions. Now, coming out of this V pattern reversal, look at what we have right here at 33,800. We've made a higher low. That's also bouncing off of a major support level from historical prices way back on June 17th. So we know that that level is important as well. We have a higher low coming out of a V pattern reversal, which is giving us pretty much all of the signs that we need to be long. So we're playing around at the 34,000 level. You know, at those 34,000 levels, you typically tend to see price action reversals, or at least small temporary pullbacks as people take profits in the market. So we don't want to buy up here. Prices are too high for us to get in right now. We want to wait for prices to come back and either retest the bottom of this area at 33,750, which just so happens to be a major quarter level, or we can look for prices to come back and really test 33,900 or 33,850. For me, because I'm conservative, I'm looking out for 33,750. That's my overall level for all of my people that are day trading. Now, for my swing traders and my long-term investors, you need to start adding to your positions, adding to your long-term positions, and increasing the equity that you have in the Dow Jones. That's what you need to do every time we get dips in the market. Whenever we have dips in the market, I come on here and I tell my long-termers, I usually don't talk to you guys too much until it's time. But right now, it's time. Whenever you have pullbacks in the market like this, take advantage. So all of my long-term traders, make sure by the end of the week, you have yourself positioned in a good spot for the future. So with that being said, Ty Trades Futures is gonna go ahead and pass it over to Darren. Let's get his thoughts on US 30 and let's see where he thinks this could potentially move throughout the rest of the week.
All right, so first things first, I'm going to recap some of the levels that we talked about last week, which was 34,540, 34,520, and most importantly, where it has recently hit was that 34,650. So where's the 34,540 and where's the 34,520? So 540 and 520, where's that at?
34 or 33?
34? Where's 34 though? Oh, 34 is all the way at the bottom. I think it's 33 though. Where's 33,540? Okay. Somewhere around there, and then 520 should be somewhere around there as well, right?
Yeah.
But most importantly, what we talked about was that 33,650, which was a very important level. It had that strong floor where it had not only one, but 2, 3, 4, 5 retests at that level, which was the combination of that red and green, red and green, and red and green, 2 times, 3 times each. So that lets us know that floor is very, very, very strong. So we're going to take note of that. So let's go ahead and hop over to the monthly and unhide my moving averages. Because we want to, with our strategy, we try to use our moving averages along with patterns and higher highs and higher lows to pretty much determine our entries, whether it's buy or sell on our lower time frame. So right here on the highest time frame, which is the monthly, Same thing, same story, higher high, higher lows. The 20 is above the 50. That lets us know that the bulls are in control. Let's flash down to the weekly. Kind of the same deal, but a little bit more crispier. It lets us know that we had higher highs and higher lows. The 20 is above the 50, but on this weekly time frame, we see that the 20 not only was above it at once, but then it came back up again. So that lets us know that the bulls are in control. It may step out of the market for a short period of time, but for the most part, it does overall is an uptrend. Like Tiberius said, he doesn't talk to the short traders not too often, but when we do talk to you guys, it is direct and it's quick and it's in and out, and that's it. So let's go ahead and flash down to the daily. Oh, before we go to the daily, notice how that the mark once we made this higher, the highest high, which was at 34,000, looks like even 34,000 even. Where is that right now? Yep, we bouncing right off of the 20 moving average. So that's giving us a little key. And look where that retest is. When we look at that low area, let's actually follow that over. And if you can notice, that is actually lining up with the high area which it was once an all-time high. So that little red wick right there. Those little tiny red wicks that have been, to me, has been kind of important in this type of pair. I don't know why, but those particular areas were all-time, all-time highs at one point in time in the market. So let's notice that 33,250, and it's also somewhere around that quarter level area, which me and Tiberius always tell you guys that those quarter levels are very, very important. So let's definitely take note of that. Let me write this down. The 33.25. So 33.25. But understanding that it's definitely on the weekly. So let's go ahead and go down to the daily. And like I said, in all my streams, by the time we get down to the daily, we should kind of have an understanding of where we're going as far as entries and exits, or if we're even getting in the market at all. So as of right now, the 20 has been consistently over the 50 all three time frames. We've been getting higher highs and higher lows on all the time frames, but now that we're looking at their daily, it kind of looks like we're kind of stuck in like this consolidation area where the top of it is at 34.80 and the bottom of it could be somewhere between 33.20. So between 34.80 and 33.20, I don't know how many pips that is. How many pips is that? That sounds like a lot. Yeah, so about 1,500 points, pips, however this is calculated. But again, this lets us know that that's kind of like the wiggle room we have to move if we were to try to enter in this consolidation period where our low is and where our high is, and we can just kind of like, basic textbook, which is we put our sell at the top of the area, and we put our buys at the bottom of the area. But let's not get too fast. So right now we know somewhere around like the 33,250, we're going to be looking to try to get in somewhere for a buy. So let's drop down to the 4-hour. All right, on the 4-hour, this kind of lets us know two things. One, that even though all the higher time frames, the monthly, weekly, daily, are showing all bullish activity, the 20 above the 50, when we flash down to the 4-hour, like the lower time frames, other than the big time frames, if the 20 is below or contradicting or the opposite of what the higher time frames are showing, it indicates to me that the market is currently right now going against the market trend. So pretty much this is going up, and going against the market trend would be going down. So pretty much we know that we're at a lower area or lower prices in which the market was at one point in time. So let's actually see, let's put the market in a little bit more, squeeze it up. Squeeze it tighter, yep. Okay, cool. So kind of I want to see pretty much where we made that low over here by the 14th. I want to see what high price over to the left it lines up with, kind of like the staircase. So, okay, so we're now lining up with these two double tops over to the left We look like we broke that area. So what's the next high that the market was at one point in time? So I think it would be that green wick over here. Go to the left over here by the April. So matter of fact, yep. So start right there. We're gonna start right there. So So now follow this price all the way over to the left, and I'll tell you when to stop. Right there, yep, those two double tops. So those highs over here, this little high steps little area, is the area I'm going to try to, focus on and see where the market has broken these high areas. Being that we got the break of these two double tops right here, the next higher level would be at, so go to the next high. Go above it. Yep, right there, which is at 33,630 or 63. Somewhere around, hopefully we can get a quarter level, which is 33.50. That's probably just a little bit lower, but somewhere around the area. But the market has broke that area as well. The market broke above that area, and it even broke over the 20. So now let's go to the next high area. So let's go to the next step. Let's go to the next level up. Yep. So it looks like the market is still kind of circling in that area right there. The market did break over both. No, not both yet, but just definitely over the 20. It is now ran into the 50 moving average. That area, where you zoom in a little bit, where you are right now, where your mouse is, just stay right here, but zoom in a little bit. Do you see that red candle? Zoom in a little bit more. Okay, right there. So, yep, now move that over until I tell you to stop. Slow, though. No, to the right. Keep going, I'll tell you when to stop. Keep going. Right there, right there. Go to that red, back to that red candle. I know I'm sorry, this is very, I know you're like, what? How in the world you see that red candle out of all of that? Do me a favor, unhide your signals, and I want you to put a box around that candle. And it actually lines up with those other green candles to the left. But I want you to put a little box over that area, and I want you to double zero it for me. Now I want to see where that is currently at, where the market is. Gonna go move over to where we are currently. All right, so it looks like we're kind of sitting dead on that area. That area lines up with a price that was previously an all-time high. And knowing that, we can use that as, pretty much like a blueprint on our entry. And notice that that zone is covering over the 50 moving average. Is that a coincidence? I don't really think so. And actually put your mouse on that on the 50 moving average. I want to see what price that is. Is that around a quarter level? 34.08. Can we get a quarter level out of that? Or there's no way. What about 34.075?
Yeah, it's close.
Okay, so we'll go with that one. So what is it? 34.0. Okay. Also, where is 33.250? That's all the way down there. Okay, so when we looked at that price was on the weekly. So we're gonna kind of cancel that out, at least for right now. And the price we're gonna focus on is the 34.075. So let's drop down to the 2 hour. All right. So the plan is, for me, I'm looking for a buy area. I'm pretty much looking for a rejection either where we are right now. Move the market over a little bit. So I'm pretty much looking for a rejection somewhere around this zone, either coming into it a little bit, finding some rejection, and moving its way down for either another retest, and then we're going to take it back up. But what I'm really looking for is a break of that zone and a retest at, you see where that red wick is at? Where it's in that zone right there? Yep. So I'm pretty much looking for a break out of the zone up above it, a retest coming back down to retest that area or somewhere into that area, whether it's the bottom of the zone, that red wick, or the top of the zone. And then we're looking for that continuation up. So to sum up everything that I said today is that this trend is in the overall downtrend. In the overall uptrend, but the smaller time frames looking like it's was in a retracement or still in a retracement coming out of, and we're now patiently waiting for the market to break a higher level, which was previously where we pointed out at the higher time frame over to the left, to get us the zone to where we are right now. So I'm pretty much looking for the break. And what price is it? 34.0. So yeah, I'm pretty much looking for the breakout of and the retest of 34.075, somewhere around that quarter level. If I can't get 34.075, I'll try to go for 34.050. Where's that at? 34.050. I'm sorry, 33. No, I'm so sorry. I keep confusing myself. 34.075. If I can't get that, where is 34.050? Okay, the bottom of the zone. And where is 34.025? Okay, the top of the area. Okay, so all of those line up. So in conclusion, I'm looking for an overall uptrend. I'm looking for a break of the zone, but most importantly, a pullback to one of those quarter levels in which I mentioned. And we're looking to pretty much take prices back up either to the top of the figure, which is somewhere around 34.50. So if we can get the market to come back up to that 34.50, somewhere around that top of the area, then it's all green lights for me. So in conclusion, I'm looking for the up move, retracement down to those levels to continue up. And that's my analysis.
Right. So that right there is the Dow Jones. And that moves us to the next pair that we have up going for tonight. We want to talk about some currency markets.